This is the Asia Trade. I'm Shery in Tokyo.
I'm Avril in Singapore. The top stories this hour. Asian stocks set for gains as tech drives a Wall Street rebound with jitters around AI disruption easing. Oil climbs on US-Iran tensions. The latest Fed minutes show officials shifting further away from agreeing on further rate cuts, putting the central bank on a collision course with President Trump. Also ahead, Aussie earnings in focus with big names including Wesfarmers and Rio Tinto reporting. We'll speak to PLS CEO Dale Henderson as the lithium miner swings back to first half profit. And we're at India's AI Impact Summit, hearing from the Google DeepMind CEO and Alphabet Research Labs Senior Vice President.
And this is how we're setting up for the Asia Open today. Of course, there's a thin holiday trading week. We still have some markets away on holidays, including mainland China, Hong Kong, Taiwan, and Vietnam as well. South Korea coming back online, and you can see Nikkei futures now pointing to some upside after a session of gains already. We had seen significant pressure on the Japanese yen, which saw its worst day this month. Of course, major currencies actually were pressured on solid U.S. economic data, actually supporting Treasury yields. Do keep an eye on those earnings and the results out of the ASX 200 companies. We're seeing the staggered open at the moment, pointing to some upside. But of course, we have been reacting to some central bank news as well. Do keep an eye on the Kiwi dollar, which was pressured after the RBNZ kept the rate steady, but they signaled that perhaps they will stay accommodative for some time. We do have central bank decisions today out of Indonesia and the Philippines as well, Avril.
Yeah, Shery, we are also seeing oil prices in focus as they rose. Geopolitics seems to be a key driver of commodities again, despite these lingering oversupply concerns. So you're seeing a bit of that breakout in oil prices, given the reporting that we could actually see any conflict with the involvement of the U.S. lasting for weeks versus something more pinpoint, which was the case we saw in Venezuela. Now, when it comes to U.S. assets, and you talk about the data overnight, we did see industrial production, durable goods orders, housing starts, mortgage applications. All these showed improved readings and pointing to signs of this resilience in the U.S. economic strength. Then take that along with the Fed minutes, right? Several officials discussing the potential need to raise rates if inflation stays above their goal. So at the end of the day, you had investors pulling back some of their bets of rate cuts in the months ahead, stocks rising along with yields, the dollar bouncing as well. And it was interesting, we saw and have been seeing Apple among the shares that have been decoupling with these AI trades as well, Shery.
Avril, to your point, let's actually delve into the FOMC minutes and what this potential shift for the Fed actually means. Let's go to Washington and bring in our Bloomberg Fed and economy reporter, Karin. We were just talking about potential rate cuts. Now we're saying that several policymakers were actually discussing a potential rate hike. How big of a shift is this?
So we had two clear messages in the Fed minutes today, Shery, as you mentioned. On the one hand, certainly the vast majority of officials were happy to keep interest rates on hold. But within that, as you say, the minutes said that several officials thought that the statement after the meeting should be flagging even-handed risks that include interest rates could go higher in the next move because of persistent inflation. And right throughout the minutes today, it's littered with references to a stabilising jobs market and the fact that inflation remains above target, and officials are worried about that. So, these minutes today do not suggest that the Fed is going to be hiking interest rates next month or indeed anytime soon. You can read these minutes through the dovish lens if you want and seize on the components that suit your argument, or you can read it through the hawkish lens. But I think on balance coming out of it, several economists and Fed watchers were making the point that it was a surprising tilt in the language. The very mention of the idea that some officials say they should be at least flagging the possibility of a rate hike was notable in itself.
And you talk about this stabilizing jobs market that U.S. officials speak of. There's also the prospect that we are seeing a jobless boom, so-called. And as we wait for the U.S. GDP numbers towards the end of the week, how does that perhaps figure into the prospects for U.S. growth going forward?
So there's a big debate going on right now, Avril, about a disconnect. As you mentioned, we will get GDP data on Friday. That's expected to show the economy growing above 2%, a pretty decent clip for the economy given the stage of the cycle we're in. You know, a recession has been called for several years. It hasn't happened. The economy continues to grow. But the issue is that the jobs market, despite the strong growth story, the jobs market remains soft. Lots of anecdotal complaints about the difficulty in finding a new job or finding a job at all, even though companies are not necessarily unleashing widespread layoffs. And the jobs data last week confirmed that it was the worst year of hiring in the US outside of a recession since 2003. And this disconnect is what we looked at today, the idea that we have a booming economy, but it's a jobless boom because the growth in the labour market isn't there. And that's what is worrying officials. Now, the Fed, as we spoke about earlier, the Fed thinks perhaps the jobs market is now stabilising. Perhaps we're over the brunt of it. Those January figures were good, and that's going to be a key consideration in the months ahead.
Yeah, there's really something for everything in this data, right? Which could make it really tricky for President Trump and also his nominee, Kevin Warsh, to actually push for more rate cuts. In this topic of sort of central bank independence, we are seeing some more concerns around even the European Central Bank. We're hearing that Christine Lagarde could be stepping down earlier. What sort of dangerous sort of precedent could this set?
Well, a lot of unknowns here in this one, Shery. The Financial Times reporting that Ms. Lagarde wants to go ahead of the French elections next year. Her term runs until October 2027, and the implication being that create a vacancy at the ECB now to allow the current French government to have their say, along with the other European governments, in terms of who should run the ECB. And that would mean they get ahead of the French election next year in the event that that's won by, say, the far-right party or someone else. But, I mean, there's a lot of, as I say, a lot of unknowns in this. But if you take it at face value, it does suggest that politics is playing a big part now in the selection of these central bank governors. We had a similar move by the head of the Bank of France only a few weeks ago, announcing he will step down ahead of his term to allow French President Macron to announce a successor before, again, the French election next year. So you can read this two ways. You can say this is important to get ahead of what could be a populist tilt in the Eurozone, which would be a bigger threat to central bank independence. Or, of course, you could say that this is trying to get ahead of ultimately the democratic vote and allowing the people to express their wishes in terms of their government choosing who might be the central bank governor. So you can read it in either direction.
And many thanks for sharing some of that analysis with us, including on central bank independence, as we weigh out the incoming and the U.S. data that has also come in. Bloomberg Fed and economy reporter Ender Curran. Now let's also talk how this is affecting the markets with Bloomberg MLive strategist Brendan Fagan. Brendan, we've just been talking about the data out of the U.S., how this perhaps informs the bets of a hawkish Fed. Maybe the rate hikes given Warsh incoming might not transpire. But with the central bank independence debate underway, what are you seeing particularly in FX and positioning?
Well, people are still pretty short the dollar. I think there's this pessimistic view on the dollar given Trump's comments prior. Obviously, Bessent pushed back on that. I mean, there's really no way you can come out as Treasury Secretary and advocate for a weaker dollar publicly. So he was always going to come out and push for a strong dollar policy. But generally, in the background, there is this bearish view on the dollar. There's also questions about hedging as it becomes cheaper to hedge your dollar exposure as a foreigner. So that's more background noise, passive. It's not necessarily something you see in day-to-day flow, but it's definitely something to think about. And then the question of central bank independence is definitely going to come in as we start to learn more about Kevin Warsh. This question of term premium coming back into the market after the recent Treasury rally is certainly something to focus on.
I mean, a weaker U.S. dollar could boost commodities, but we have seen oil prices at least being very much at the mercy of geopolitical headlines, especially around Iran.
Yeah, certainly. Oil is definitely an interesting market. You're definitely caught between this geopolitical risk here in the now, but also the supply glut for 2026 and 2027 beyond. You still have OPEC Plus flooding the market with supply. You have plenty of supply coming out of the U.S. Now you have Venezuelan crude online. So it's this push and pull between a supply story and geopolitical risk. You are seeing call skew pick up in near-dated calls, but also you're seeing traders move out into further dated calls, but also higher strikes. So expecting more volatility, more upside, but also possibly a longer dated confrontation, which is going on. And that certainly picked up today with some Axios reporting, albeit it was sort of an op-ed piece. But it seems like things are picking up steam. The U.S. and Iran seem to be pretty far apart at this moment.
Brendan, wanted to pick your brains as well when it comes to the stock market moves we saw overnight, tech bouncing. What do you make of this reversal, so-called, in the rotation? Have we seen the bottom yet?
I don't know if you can say you've seen the bottom just because we have NVIDIA earnings next Wednesday. NVIDIA is about 8% of the S&P 500, so a pretty significant part of the tape. And that's basically why when you see an NVIDIA update, you see an update for the major averages. That was the case today with NVIDIA up about 1.6%. So earnings next Wednesday will be key. I think if you're looking at that name specifically and how it plays out into the broader space, that 180 level in NVIDIA is very key. It held there, but we're bumping up against the top end of a multi-month range in the name. So we're sitting at a very crucial part in the chart. Price in the chart heading into next week. So it's kind of this make or break territory that we find ourselves in. Are we going to break higher out to revisit the late 2025 highs, or are we going to break down in the tape again? If you look at the index level, we're still below key moving averages. So from a technical and chartist perspective, the charts still don't look that great for tech, and you're very worried about that.
Yeah, I mean, we haven't been back towards that 7,000 level on the S&P 500 since October or so. Brendan Fagan, always good to get your views, Bloomberg M-Life strategist, with what to expect out of the markets. As we're following some other top global headlines today, National Economic Council Director Kevin Hassett blasting a New York Fed study on tariffs, calling it an embarrassment and saying those behind it should be disciplined. The Fed report found that nearly 90% of the tariff burden in 2025 fell on U.S. companies and consumers. Hassett argues the research overlooks changes in import volumes and insists Americans will ultimately benefit from the tariffs. The Wall Street Journal is reporting that a major U.S. arms sale to Taiwan is in limbo following pressure from Beijing. The report says some in the Trump administration are concerned that approving the deal could derail the president's upcoming visit to China. Trump said earlier this week that he had discussed the issue with Xi and would make a decision soon.
Coming up on the Asia Trade, we discuss Kirin's push to diversify beyond beer by setting up a health science hub in Australia. AlphaSimplex joins us to talk market strategy, and as lithium producer PLS swings back to profit, we'll get the sector outlook from CEO Dale Henderson in an exclusive interview. This is Bloomberg.
February 24th, as affordability, immigration, and national security dominate the headlines leading into the midterms, President Trump will deliver his State of the Union address. Balance of Power will bring you live global coverage starting at 8 p.m. Eastern.
Let's take a look at some of the movers in Australian markets. It's really all earnings related. We're watching out for Rio Tinto's reporting. Meantime, we have fellow miner PLS coming in with a return to profit. And Wesfarmers is reporting a beat in net income, but shares are down today. Telstra also looking at a beat when it comes to its estimates, its dividend as well. And this is helped along by its mobile unit. In terms of Australia stocks in general, energy is leading the charge, tracking oil prices. Let's dig a bit deeper into these earnings scorecards from Australian group Wesfarmers, warning that cost of living pressures are impacting many households as it announced a 9% or a 9.3% increase in first half net income. Paul Allen joins us now with more. So, Paul, we had a solid set of numbers for Wesfarmers, but how is consumer sentiment in Australia heading into the second half?
Yeah, it's okay, but it's obviously enough of concern for Wesfarmers to see fit to mention it in these results. We have, of course, had a rate increase from the Reserve Bank of Australia back in February, potentially more to come. Inflation's pretty sticky. So Wesfarmers saying that cost of living pressures are being felt unevenly and are impacting a lot of households. So we've got offered also the first 6 weeks of the second half from Wesfarmers. They say the retail division's trading pretty well, and this includes absolute total totems of the Australian retail landscape like Bunnings, Officeworks, Kmart as well. They were all in line with estimates in the first half. Net profit $1.3 billion for the group as a whole, and the interim dividend of $1.02 per share. But this is a very diversified company. It's also involved in minings, fertilizers, chemicals. That business contracted 3.2% on year in the half, although the health business enjoyed a narrow beat. We're seeing shares, though, as you see on the screen, they're off by more than 5.5%. Volume pretty heavy in Wesfarmers stock this morning, and they're seeing the biggest losses they've seen in about 16 weeks.
And talking about mining, we're also going to get results from Rio Tinto later in the day. What are we expecting?
Bloomberg Intelligence is forecasting perhaps a 14 to 17% increase in EBITDA. That would take it up to $25 billion. Iron ore prices were a little bit lower than expected in the second half, and of course Rio gets about half of its revenue from iron ore. But the company is diversifying. We heard just this morning that it's taking majority control of Canada's Nemaska lithium as it makes a push into battery metals, and we'll be watching the copper headline very closely as well, because copper provided such a huge boost to rival BHP this week. And of course, Rio Tinto's giant Oyu Tolgoi mine in Mongolia getting closer and closer to full capacity. But copper makes up about a quarter of Rio Tinto's revenue at the moment. We had some remarks as well from the Glencore CEO, Gary Nagle, because of course, these results fall in a period where that giant merger between Rio and Glencore failed to clear the launch pads. Gary Nagle saying that the world's top miners are going to have to get bigger. He points out that they're now dwarfed by big tech companies, and that as mining and commodities become more and more politicized, these companies are just going to have to grow to get their voices heard.
Bloomberg's Paul Allen there with the latest on Australian earnings. And we actually have plenty more coming up. We'll be speaking exclusively to PLS CEO Dale Henderson as a lithium miner reports a 47% jump in first half revenue, but holds off on an interim dividend to preserve balance sheet strength. This is Bloomberg. Microsoft President Brad Smith says their partnership with OpenAI remains crucial even as they expand work with other AI developers. Smith also told us how he expects the partnership to evolve in the future.
I think it remains a critically important partnership for Microsoft. We bet on each other, but it's not as exclusive as it was, say, a few years ago. OpenAI uses our compute, they train models in our data centers, but they work with other companies as well. We critically rely on OpenAI's frontier models. They are among the best. On many days, they are the best in the world, but we have a relationship with Anthropic. We use open source models. We're developing our own models. So on both sides, we work with more partners, but I think the partnership between the two of us remains an imperative. It's a huge priority for us at Microsoft.
The question is why? Is it a hedge? Is it a strategic pivot? How would you describe that move looking at alternative partners?
Well, look, if you want to think about the partnership between OpenAI and Microsoft, all you have to do is ask one question. Would any of this generative AI sector even exist if the two of us had not come together? OpenAI created something that no one else even understood was possible when they launched ChatGPT. And OpenAI could never have created that without Microsoft's compute and really frontier data centers on which to train that. We built something special. We'll each do special things on our own. We'll each do special things with other companies. We'll each do, I think, very special things with each other.
Just one final question, because we're running out of time, apparently. Copilot, is it losing traction?
I don't think so. It's gaining ground. It's getting better every week. It's getting better every month. I say this as a user, not just of M365 Copilot, but our consumer Copilot, our researcher agent, our other agents. We're seeing usage grow. We will continue to add features and functionality. I personally think it is an important part, not just of Microsoft's past and present. It is a key part of our future. It is a key part of, I think, making everyone more creative, more productive. I certainly find that in my own work each and every day.
Microsoft President Brad Smith speaking with Bloomberg Insight anchor Haslinda Amin. More on artificial intelligence coming up from the India AI Impact Summit. We'll speak exclusively with the COOs of Zoom and enterprise software provider ServiceNow. Plus, Schneider Electric CEO Olivier Blum will join us. Those conversations coming up at the times on your screen. Meantime, French President Emmanuel Macron is rejecting social media companies' free speech defense as Europe considers banning children from platforms such as Instagram and Facebook. The Trump administration has criticized the proposals, calling them a form of censorship. But speaking in India, Macron said the free speech argument doesn't stand up.
Having just no clue about how the algorithm is made, how it is tested, how it is trained, and where it will guide you, I mean, the democratic consequences of this bias could be huge. Some of them claim to be in favor of free speech. Okay, we're in favor of free algorithm. Totally transparent. Because, I mean, free speech is a pure bull. Nobody knows how you are guided through this so-called free speech, especially when it's to be guided from one hated speech to another hated speech.
French President Emmanuel Macron speaking in New Delhi. We're watching Asian futures at the open. We still have some markets away on holidays, including mainland China, Hong Kong, Taiwan, and Vietnam. But you can see right there that at least at the staggered open on the ASX 200, we're up 0.8%. We'll be watching those miners, especially since Australian earnings season. We are expecting the results out of Rio Tinto as well. U.S. futures not doing much, but we had some upside in chip makers with the Philadelphia Semiconductor Index, in fact, gaining more than 1%. Also, software firms jumping about 1.3%. And we will be watching those tech stocks in the Japan Open as well. We had a session of gains for the Nikkei, and we had some weakness on the Japanese yen, so we'll be watching those exporters coming off the worst day this month when it comes to the Japanese currency. Of course, we had a thin holiday trading week, but also a broader sell-off in major currencies with U.S. economic data supporting higher treasury yields. South Korea is coming back from holidays today. It's interesting because during the holiday, it was Korea that led those Asian ETFs. You can see that chart on the right, and that's a line in white. The South Korean won weakened as foreigners resumed selling of local shares just before it went away on holidays, and the yen also softened, so we'll be watching the Korean currency. But today, very important for South Korea because also we do have a court deciding the fate of former President Yoon Suk-yeol on that insurrection charge, Avril, after his martial law declaration back in December 2024. Also watching the tech sector in South Korea, obviously, given how tech-heavy they are. But also we're getting from Chosun News that Samsung is negotiating the HBM4 unit price at around $700.
Yeah, Shery, on top of perhaps watching some of these Asia currencies in the sites, including the Korean won, the yen is also in focus. Overnight, we did see that bounce in the dollar. It was interesting how yields were supported, but the clear function in reaction was in currency. So perhaps today that's informing what you're seeing in the relative weakness in the Japanese yen. More ahead on the Asia trade. This is Bloomberg.
And this is how we're setting up for the market opens across Japan after a session of gains already in Japanese equities. We are seeing downside on the Japanese yen after its worst day this month. A thin holiday trading week. We do have a broader sell-off in other currencies as well, given the U.S. economic data sent the U.S. dollar higher. You can see futures holding steady. Nikkei futures up 0.7%. of 1%. And here in Japan, Sanae Takaichi reappointed as prime minister following her resounding electoral win, a formality that allows her to turn her attention to expediting passage of the annual budget and implementing a trade deal with President Trump.
As for the upcoming Japan-U.S. summit, I would like to not only further enhance the trust with President Donald Trump, but also strengthen Japan-U.S. relations in various fields, such as national security, economy, and culture. Additionally, I am determined to enhance Japan-U.S. economic security, including critical minerals, such as rare earths. I would also like to have a discussion with the U.S. on how to proceed in the marine mineral resource development in the waters surrounding Namani-Torishima.
For more, let's bring in senior editor Brian Fowler. And Brian, that sweeping mandate that she got after the election, does that give her a bit more leeway in really quickly implementing this trade deal?
Yeah, Shery, I think that's absolutely right. So we heard from her last night, and we'll get her big policy speech tomorrow in which she'll lay out a lot of what her agenda is going to be. We expect her to talk about this idea of cutting the sales tax on food purchases for 2 years. She's already said that she wants to put that on a priority list. But she'll also talk about the deal that's been done. I think that gives her a lot of momentum going into her meeting with Trump next month. And the great thing about the deal from her perspective is that it touches on a lot of the priorities for Japan, from critical minerals to energy. So I think she'll tout that and give us some more information about that.
Talk to us as well about, in terms of, following on from her strong mandate already, aside from this deal on energy into the U.S. and in terms of investment, what else is she likely to continue having more impetus pushing through in terms of her ambitious plans and pledges?
Yeah, so I think, first of all, she does have to make sure we get the budget for the coming fiscal year passed by the end of March, really, just so we avoid having to do some kind of interim budget to tie us over. So that's going to be the first thing she wants to do. But then she wants to look at all the other things that are on her list. She's talked about building up defense capabilities. That'll be on there. She's going to talk about her foreign policies. I would expect her to take a very measured tone in terms of foreign policy and not say anything more that might rankle relations with China. And then she'll talk about fiscal policy, but she'll stress that she wants to maintain a responsible approach to fiscal spending that somehow gives the economy a boost without sort of kindling concerns about the national debt.
Brian, the $36 billion of investments into the U.S., two things that come up to mind. One is it won't make the South Koreans look good, how fast this is happening. But also, number two, how SoftBank is so involved.
Yeah, well, that's right. And Korea has already come under pressure for not getting the bill passed in Parliament that would allow it to pursue its own investment deals. So that's a question for President Lee. But SoftBank, SoftBank's going to be leading this consortium of about 20 companies from Japan and the U.S., and a subsidiary of SoftBank is going to be operating this $33 billion natural gas plant. So SoftBank is very up to its neck in this project, and we would expect that. Masayoshi Son has been very vocal in the past about supporting investment in the U.S., heeding the call from Trump to help revitalize U.S. industry. So, yeah, it's a huge success for Son, just that he's right at the top of this deal and getting all the publicity he wants and whatever else comes along with that.
Yeah, he's almost been the face of Japanese investments into the U.S. at this point. Brian Fowler, good to have you with us. He's a senior editor here in Tokyo, and we'll be watching the SoftBank stock at the open here in Japanese markets when valuations across the board are now at the highest in decades across Japanese equities. We saw that Buy Japan rally following Prime Minister Takaichi's decisive election victory. Now investors, though, questioning how much upside remains. Let's bring in Bloomberg senior stocks reporter Hideyuki Sano as well. We've had not only Takaichi's win, but even before that, the whole idea of corporate governance reforms, the whole idea of more returns to investors, pushing Japanese stocks higher. So how much higher can they go?
Of course, if I knew the answer, I would be
we would be rich.
But having said that, it's becoming harder to deny that market valuation is getting stretched. I mean, if you look at the topics, it's now trading at 18, more or less 18 times the expected earnings for the next 12 months, and that's way above its traditional range of 12 to 16%. And if you look at the tech-heavy Nikkei, it's even higher. It's trading at 24 times, and it's almost reaching the valuation of Nasdaq, which is, as we know, probably one of the highest, the most richly valued index in. So many investors are starting to wonder how much upside there will be, at least in the short term. And you could argue that we don't need to be constrained by the old valuation regime because of the factors you have talked about, like corporate governance, and inflation is coming back to Japan, so companies are getting back pricing power, etc. But then again, the question is, where the new valuation, where value would be, and if is it 14 to 18 times, or is it 16 to 20 times? I mean, if it's 14 to 18 times, the market is already expensive. So, I mean, that's the question investors are looking to find an answer.
If we continue miling, I guess, this end of the old valuation regime, I wonder what are the sectors that are perhaps more susceptible or prone or primed for outperformance under Takaichi as well?
That's a very tough question. But one sector that seems to be very vulnerable are the so-called momentum stocks. They have risen so much. One area is the defense shares. I mean, it's interesting to see that defense shares have not risen. Defense shares haven't outperformed the topics after the election. And even though people are talking about defense as one of the main potential beneficiary of Takaichi's new policy agenda. So that suggests something about market positioning. And we could also say some chip-related stocks, their valuation is so expensive at this point.
Bloomberg senior stocks reporter Hideyuki Sano here with the latest on the Japanese markets as we await that open in about 20 minutes. And coming up, we discuss Kirin's push to diversify beyond beer by setting up a health science hub in Australia. Senior Executive Officer Toru Yoshimura joins us next. This is Bloomberg. Shifting drinking patterns and rising health concerns are leading to a long-term decline in alcohol consumption worldwide, and that's forcing liquor companies to diversify. Japan's Kirin may be best known for its beer, but it's also making a full-scale push into health sciences to help drive growth. The company wants this sector to make up 20% of its sales as soon as 2030. Joining us now is Kirin Senior Executive Officer Toru Yoshimura. And Toru, of course, you also head the Health Science Business Division as well. Welcome to the show.
Thank you for having me here.
So tell us a little bit about how significant your division is to the rest of the Kirin Group.
Oh, okay, thank you. Kirin has expanded from its founding beer brewing business in 19th century, and then into the food domain, and then we entered to the pharmaceutical sector back in 1980s. And health science business is kind of another pillar which bridges between food and medicine, and which we are confident to nurture. The globally solving the people's health problem like immunity, anti-aging, and gut health, and sleep. And we expanded our business based on the two key expertise. One is R&D based on the fermentation, the biotechnology, and also other marketing, with understanding, a deep understanding of the consumer needs.
So this seems like a very natural progression for Kirin at this point. You also purchased Fankle, a brand in China. Where are the bright spots around the world? Because even the Chinese market is such a tricky one, isn't it?
Yeah, it is. China involves a lot of, the uncertainties like regulatory and microeconomic and also geopolitical standpoint. And but the China is one of the spots that we are really looking at as the kind of a potential market for us, leveraging the Fankle brand. And the Fankle is the Japanese leading the supplement and the cosmetic or skincare company, which we acquired in 2024. And that is a really key business unit for us to nurture our brand and also the health science brand. And in the China, the Fankle brand is already there, along with our another business unit brand, Blackmores.
That's in Australia.
Yeah, that's right. They joined the Kirin Group in 2023. And that with the infrastructure, Blackmore and China, the Fankle in China, we are confident to expand this business.
So you're planning to expand in China. What about the United States? Because you now have this U.S.-Japan trade deal. The mood seems very favorable. Is that one market that you could target?
Well, actually, our primary target right now is Asia-Pacific. Because we want to be one of the largest and most trusted health science companies in Asia Pacific. Probably the first of our priority will be the Southeast Asia and China. However, because of the scale of the wellness market, the U.S. is really also very important for us, and but the U.S. has kind of higher barrier entry and fierce competition there. So we really need to establish ourselves as kind of a credit-based position in the U.S. Probably with a science at its core.
How else are you expecting to perhaps establish that as you perhaps look to the U.S. as a key market, Toru-san?
Oh, as a U.S. market? Oh, other than U.S. market.
What are you looking at in terms of a science-based approach when you look at the U.S. as a place of opportunity? What some of the other metrics and approaches might be as you explore the U.S.?
I see. Thank you. And, as I mentioned, credit-based approach means that we leverage our expertise in R&D based on the fermentation of biotechnology. And I strongly believe that we can leverage our proprietary ingredients Kirin has been developing, something like we call it LC plasma, plasma lactic acid bacterium, and also acetylcholine. And LC plasma is actually the ingredients which activates called the PDC, the command center of your whole immune system. And acetylcholine that works primarily in your cognitive or brain function. And we sell acetylcholine in the U.S. already, produced by our biochemical business unit. With this kind of the scientific evidence, will really help to deploy our expertise and also the nurture our business in this space.
You mentioned earlier also geopolitical tensions really not helping When it comes to China, are you seeing any change in the business because of the U.S., because of the Japan-China tensions?
Well, for both Blackmores and Funkos, it's too important, to nurture or expand our business in China. So, people places their value in the science and the product quality. So that's where we can, leverage our expertise as Kirin.
Where do you produce? I'm sorry, because the yen is also very volatile, right? So do you have manufacturing facilities in China or here in Japan only?
All products are actually produced either in Japan or Australia. So we are doing mainly through e-commerce, including the cross-border e-commerce. So now this is the time for us to really consider to establish their domestic or local sales channels there. And also, sometimes we need to consider the local production. However, because of the size at this moment, it's too early to think about it. So this kind of diplomatic tension is really, the area we need to carefully watch. And I strongly hope, this kind of diplomatic tension will be eased by the Takaichi administration, especially for the sound trade market environment.
Do you see that already happening with Takaichi administration now that she has a stronger mandate? How do you assess her sort of business support?
We are not sure yet. From the position of the government and probably just her new administration has started. So we'll see what's going to happen. But in the meantime, we really need to select our winnable area carefully for Kirin and also Blackmores and the Funkos. Then probably operate with the agility and the discipline.
Is the strategy M&As? Because it seems you purchased Funko, Blackmore, so your expansion overseas, will that be inorganic through purchases?
Well, actually, we don't have, any specific transaction I can discuss here in public. But, because
there's some under consideration.
Yes, and because we acquired the Blackmores of Funko, our primary focus is to grow organically, to leverage this existing the business units. However, we really would like to explore the opportunity if it helps to grow or enhance the health science business from the view of the brands, route to market, and any capability we lack of. So, and also, to the point I mentioned earlier, we are looking at, we're focusing on the Asia Pacific. However, probably we would look at outside of Asia Pacific as well. The one example is the United States, because it is the biggest, wellness market in the world.
Given the high entry barrier that you mentioned earlier, M&A would potentially make sense if they already had the channels established there.
It will be. But still, again, our primary focus is to grow organically. But in the meantime, we have long list, short list. So we'll keep looking at it.
What about Southeast Asia, because it's such an important market as well? Or is it for Kirin, I guess is my question, because you have big markets like China, you have Australia, but what about the smaller countries in Southeast Asia?
Well, Southeast Asia is really important for us because this area is really growing almost a double digit. And one of the world's fastest growing probably the space for health-related spending over the next 10 to 20 years. However, the consumer needs really differ, among these markets. So we really need the market-specific approach.
How are they different? They are different from each other.
Regulations, and also we need to consider the religious part as well. And also in some countries for skin, some countries for the gut system, some country, and has a needs for the anti-aging. Anti-aging is actually becoming more and more popular. And but number one is regulations. So but fortunately, black marks are already there, so, and we can leverage their capabilities in the regulation part as well.
Toru, really good to have you with us. Thank you so much. Toru Yoshimura here, Senior Executive Officer at Kirin.
Thank you very much.
It was really great getting his insights into his new health science business. But right now in Japan, we're also getting breaking news. The core machine orders for the month of December at the moment coming in at growth of 19.1% month on month, which is much higher than was expected by economists. Also coming off a contraction from the previous month. Year on year is also growth of 16.8%, much faster acceleration than economists had expected, also going into the green from a contraction in the previous month. And perhaps not that surprising given that we had those export numbers out of Japan also out this week showing that exports expanded at the fastest clip in more than 3 years. So core machine orders here in Japan exceeding expectations. We have more ahead. This is Bloomberg.
Let's take a look at how Asia is shaping up ahead of the markets open in the next hour. We are seeing futures pointing to upside. This is, of course, following on from that so-called reversal of rotation. Tech finally bounced in the U.S. For the moment, if you're looking at the ASX 200, a lot to do with the energy-related names tracking the climb in oil prices. Now, in terms of tech in the region, what we are going to be watching as well is this potential reaction to local media reports that the likes of Samsung has negotiated for the unit price of its high bandwidth memory 4 to come in at around $700. So this would represent a roughly 20 to 30% price hike from the HBM3E and also higher than the SK Hynix price for high bandwidth memory 4. But of course, this was a price that was set back earlier in August. So some have already talked about the potential for hikes for the likes of SK Hynix as well. So we're watching the chip names at a time where Korea markets have been leading Asian ETFs during the holiday. That's what we're seeing in pre-markets, and this is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. After a session of gains on Wall Street, we had those AI disruption fears easing a little bit, but Avril, solid U.S. economic data leading to people perhaps changing their minds when it comes to where the Fed could go from here. Are they shifting from a potential rate cut to a rate hike?
Yeah, especially when you mull what's come out from the Fed minutes for its January meeting and that they seem to be a bit less worried about the jobs market. So a lot to unpack as well for the session today, Shery.
Yeah, several policymakers actually thinking or talking about a potential rate hike has been one of the major headlines that the U.S. dollar treasury yields reacted to. Here across Asia, we do still have some markets closed, so it's going to be thin holiday trading. The likes of China, Hong Kong, Taiwan, Vietnam still away. Japan, though, has been open all week. We are looking at the Nikkei now gaining ground after another session of gains in the previous session. We're coming off a weaker Japanese yen. The board stayed this month, and you can see it headed towards that 155 level. We are digesting the latest machine orders core numbers for the month of December, surprising to the upside. Also, Prime Minister Takaichi again reappointed as Prime Minister, of course, after that huge election win. We'll be watching some of those sectors very closely, where the U.S.-Japan trade deal has led to $30+ billion of investments from Japanese capital into the U.S. and a key player there, SoftBank. So do keep an eye on that stock. Take a look at how South Korea is opening, coming back from the Lunar New Year holidays. In fact, when they were away on holiday, their ETF actually outperformed other Asian ETFs. So do watch out for that pop that we're seeing early in the session of more than 2%, especially around the names of tech, Samsung, their HBM4 exports, all of that playing into the markets. The Korean won, though, still weaker against the US dollar. 14.53 is the level, Avril.
Yeah, we are also mulling these geopolitical developments against the backdrop of reporting that the U.S., if it engages in any operation in Iran, that this could be a weeks-long affair, perhaps not so much like the likes of its operation that was considered to be a bit more pinpoint with the likes of Venezuela. You are seeing a bit of pullback when it comes to U.S. crude futures, but we actually saw the gains of about 5%, $5 already in the prior session. I think it was the steepest climb since at least October, and this is also perhaps the specter of geopolitics becoming a key driver for markets. But when you look at stocks, it had to do with the data overnight in the U.S. And this is the economic strength that seems to be trickling through, whether you're talking about industrial production or other data points, including housing starts, mortgage applications. So in terms of U.S. futures, you're seeing a bit of that softness trickling in, but it was a climb that was led by the tech stocks, which was a bit of a more convincing bounce compared to what we've been seeing in the past couple of weeks, given these AI disruption fears. Now, given the Fed minutes as well, we have been seeing yields supported. That's also helped the likes of the dollar. We saw most major currencies sinking against the greenback in the past session. Joining us now, Katy Kaminski, Chief Research Strategist and Portfolio Manager at AlphaSimplex Group. Katy, always good to see you. Let's start with the stock market outlook, because we are seeing stocks in terms of the tech rebound creeping back in. To what extent is this perhaps a blip, or are you seeing more signs of the rotation easing off and AI disruption fears also being pushed back a little?
I mean, I think this is a great question because today was a very strong day for AI and for the AI theme. And so I think we have this continued back and forth of concern. But I think what was particularly interesting today is that you did see some slightly hawkish or more mixed view from the Fed, and we still contained the momentum in the AI theme. So I think we're going to continue to play this dance with this rotation. And this year we have seen that, but it is sorting itself out, it seems.
What do you think the next catalyst is going to be for us to see a leg up when it comes to tech, or at least an end to the sort of selling we've been seeing in the past couple of weeks?
I mean, I think people are going to be very focused on growth. They're going to be very focused on earnings, and data related to that is going to be something that's confirmatory for the AI theme. I think, what happened in software is not going to be easily forgotten. So obviously there'll be continued speculation about where we could see some of the potential impact of AI. But I do think this is sort of the next phase of that AI trade this year in 2026.
And how much weight are you giving to the latest FOMC minutes where several policymakers were potentially talking about rate hike?
Oh, that's actually a good point. I mean, I think you come away reading these minutes a little more confused because it is a little more mixed and sort of generally the view has been, and we have seen this, that bonds had been rallying until just the last day or so. So there was sort of this optimism about potential rate cuts. This kind of backed the markets up a little bit on that narrative. It also strengthened the dollar. So I'd say today's minutes left pretty much the market scratching their head a little bit about there's no clear trajectory at this point.
Which it really leaves the dollar pretty volatile, right? Especially other Asian currencies on the other side of that trade, and perhaps even the commodities market, because of course is also impacted by the strength of the dollar. Given all of the different narratives that we have at play going into the next couple of weeks with the Lunar New Year, thin trading across Asia, what are the key catalysts for you?
Well, I would say the biggest thing to watch is this divergence across different indices. I mean, if you look at Korea has done so well, Japan has done so well, and you've seen China obviously behind. And so it's really watching where, how, if that particular divergence in performance can persist. And a lot of that is driven by AI. So really sort of following that narrative, and if it holds up, and that doesn't come into question like it has in some of the US sectors. So I think that's something to question, particularly for Asian markets.
Katy, are you still long Chinese equities? And what are you seeing in terms of the coalescing of the drivers that support that case?
So I'd say that signals in Chinese equities are very muted to flat. That's because they have been, struggling in relative terms. When you compare that with places like Japan, Taiwan, Korea, the strength of those trends have been much stronger. I think what you need to see is a stronger consumer. You need to see stronger data out of China to see a potential reversal. And we just haven't seen that yet. So I think we just have to keep watching China and see when we have a potential entry point for China.
To your point about the outperformance of Japan and South Korea, to what extent is that going to be very narrow in terms of tech-led, or do you see other factors that can be driving that in the first half of this year?
This is a very good point because both Taiwan and Korea are relatively narrow indices in terms of their reliance on a few key technology, AI, chip-related companies means that they're a little bit more vulnerable to that potentially reversing. But at the same time, they have benefited strongly from that particular theme. And I think, we experienced that already in the United States, but that's one potential thing to watch is that because there is that focus, they're more vulnerable to reversals in the AI theme.
And to what extent then is the factor of currency perhaps going to be part of the equation when you look at these markets? I mean, we are seeing a lot of that reversal in the dollar bearish bets. That has been coming from positioning. And as maybe some of that eases off a little, how does that perhaps play into your outlook for equities in the first half of the year for Asia?
I mean, this is a very good question. I mean, oftentimes you get it the other direction, sort of like how, are equities affecting the dollar. But I'd say the dollar becoming much weaker has definitely a potential for some shifting around, because obviously when you have difference in value there, you can actually start to see those flows. The dollar has gone progressively weaker for the last year, making sort of anything dollar denominated much more reasonable. If that switches, that could potentially make it an opportunity for foreign assets as well.
Are you also seeing opportunity when it comes to fixed income? And how far out are you perhaps looking still, even though we have been already seeing that demand coming back for bonds?
So this is a good question. Fixed income has been extremely difficult to trade over the last few months, and signals have been very muted. We did see some short signals in fixed income, particularly as you're seeing a little bit of a pause and a wait for rate cuts on the horizon. Those signals have shifted more long, but they're still very much muted. And what that means is that we seem to be in somewhat of a lull, waiting for more direction on monetary policy globally. Many economies have been towards the end of their easing cycle. So I think we're sort of waiting for a catalyst to see that may be an opportunity point.
Katy, good to chat. Thanks very much. Katy Kaminski is Chief Research Strategist and Portfolio Manager at AlphaSimplex Group. We have more ahead on the Asia Trade. This is Bloomberg.
February 24th, as affordability, immigration, and national security dominate the headlines leading into the midterms, President Trump will deliver his State of the Union address. Balance of Power will bring you live global coverage starting at 8 p.m. Eastern.
Take a look at how Murata Manufacturing is trading. It's up slightly 0.3%, extending 3 sessions of gains already. And this company is really a key player when it comes to MLCCs. It's the largest supplier in the world. These are essential components that regulate power flow in electronic devices, from Apple's iPhones to Tesla cars. And Murata holds a more than 40% share of the entire MLCC market and commands as much as 70% of the market for cutting-edge capacitors used for artificial intelligence servers. Now, we spoke to Murata Manufacturing that says geopolitics are forcing it to diversify supply chains and build inventory to protect deliveries. The company president, Norio Nakajima, also told me that China remains a key market despite tensions with the U.S.
Of course, depending on the area. However, in case of MLCC, we still have 10 years difference of technical capability. However, catching up time is rapidly. So getting higher and higher.
A bulk of your business is in China. Even global customers inside China. How are you affected by the geopolitical tensions between Beijing and the West?
Some of the component we are producing in China with integrated some local materials, some local machine. So most of the area we ship the material and the equipment from Japan to China. However, some competitive area we purchase material and machine domestic in China.
Which raises a question, what about geopolitical tensions between China and Japan as well? Does that complicate the picture for you?
Yes. And after becoming a president on year 2020, we start to accelerate to have multi supply chains. And we try to cooperate or cover both economical areas. One is U.S. centralized economic areas. And another one is China centralized economic areas. So population in China is decreasing a lot at this moment. However, if I talk about the Chinese centric economic area, will include some of Africa or other areas, since they aggressively invest infrastructure to those areas. So our Chinese customer accelerate to expand their exporting smartphones, PCs, other devices. So Chinese market itself is still growing.
You have talked about not having any plans for U.S. manufacturing just because a lot of your components go into products that are assembled here in Asia. If the geopolitical situation becomes worse, could you even consider localizing in North America?
At this moment, we have no plan. However, again, most of the data center demand coming from US, I think more than 80%. So I think a very tiny MLCC, it's quite difficult to transfer the technology from Japan to US for MLCC type of business. However, some of assembly type of business, we have some possibility.
Geopolitical tensions also impacting rare earth. How is that affecting your business? Are you readjusting, reallocating based on it?
Of course, first priority to secure our delivery to our customers. So we have some inventory to secure, to avoid supply constraints. However, on the other hand, we started to evaluate so dual or triple supply chains even for rares.
How long is your inventory rundown right now?
We cannot say exactly. However, if that situation will continue more than 2 years, it has some impact.
Murata Manufacturing President Norio Nakajima speaking to us in Kyoto. Let's take a look at South Korean assets on a day where stocks are rallying hard and the Kospi has climbed to a record. A lot of this is driven by tech, particularly given local media reports of that price hike for the HBM4 for Samsung. We are seeing it climbing almost 5% there. And against this backdrop, the dollar Korea won pair is hovering at the 1450 level. And this is all coming on a day where a South Korean court is set to rule on former President Yoon Suk-yeol, who faces a possible death sentence over his 2024 martial law declaration. Bloomberg Seoul Bureau editor Denny Thomas has more. Denny, it's hard to believe a bit that it's been more than a year since that martial law declaration, which really stunned the world. What are you watching out for today, and could he really face the death sentence?
Yes, it's a historic day, and as you say, it doesn't look like we have been past so many months, nearly coming to over a year. So the prosecutors have asked for the maximum sentence, which is death penalty. Well, there is a bit of a debate here whether it will go to that extreme. He might end up getting a life sentence, which also means that he will be in prison for the rest of the life. But there's also the other case that people point out to, where the former prime minister was given a much longer prison term than what the prosecutor asked for. So it's still up in the air, but broadly people believe that he might end up in a sentence in life rather than getting a death sentence. That's where a lot of people are kind of glued onto their TV sets today.
And yet South Korean politics is also plagued by presidential pardons and so forth, right? So we'll see what happens to that sentencing. This is not the only charge that he faces, though. He's facing a lot of legal action.
Yes, I mean, this is kind of the most pivotal moment in the martial law ruling. But he is facing a litany of other charges. He's already, even if it's by any stroke of luck, he has been pardoned today, he will be still in the prison because he's already facing a 5-year charge in prison. So there are other charges that follows him. So this is not going to any way have any implication of what Yoon, whether he will be set free or not. That's not a question at all. He will be in for long in this particular case.
What about political implications for President Lee Jae-myung? I mean, we also, it's worth remembering, saw him swept to power against the backdrop of what happened to Yoon. Now that, he could face a very harsh sentence, what kind of ramifications might that have for the president?
Yeah, that's a good question, I think. And one of the points that a lot of the commentators are kind of pointing out is that people want to see these kind of actions being punished to the worst so that nobody ever repeats this. And if Yoon is sentenced to maximum today, I think one thing will become very clear, that President Lee will have a bit more flexibility and freedom to kind of go ahead with his own agenda. And if you look at what Kospi has done, which clearly shows that his agenda has momentum here. And today's verdict, if it is going to cap the almost 1.5 years of political drama, it really gives President Lee, a lot more confidence to push ahead with his agenda without worrying about what's happening to the previous cases.
Bloomberg Seoul Bureau editor Denny Thomas there, watching, of course, that court verdict out of South Korea today. We have more ahead on the Asia trade. This is Bloomberg. Take a look at how European futures are trading after stocks already gained to a record high. We have seen gains in banking and the defense sector. Right now, stocks 50 futures under a little bit of pressure while the euro holds at that 117.89 level. But of course, Avril, we're also coming off the back of reporting from the Financial Times that ECB President Christine Lagarde could be stepping down early from her 8-year term and perhaps leading to some concerns about the ECB's independence, also perhaps setting a precedent that could be dangerous in the future. This would mean that potentially France's Emmanuel Macron could actually play a role in appointing her successor, and this could lead to some political questions.
Yeah, I mean, this is coming at a time where, if Lagarde does indeed step down early, that Macron, rather than the next French leader, would actually be naming the ECB's successor. To your point about, does this raise concerns about ECB independence and how might this affect monetary policy? And this is coming at a time where inflation in the Eurozone is coming in under the ECB's 2% target. We actually have a really good Bloomberg intelligence piece that's been put out in terms of the scenarios that we should be watching if Lagarde does indeed step down early, and also who the potential contenders might be. We have some among the German members that perhaps have a bit of a hawkish slant. That might actually be something that rules them out. So this is coming at a time where we have been seeing, well, on a day like that, the dollar slumping a fair bit or reversing the overall gains that we've been seeing in the past session. The euro versus the greenback is clawing back some of those losses. But of course, a day ago, we did see all the major currencies losing ground against the greenback, given the data out of the U.S. This is what you're seeing with euro against some of its major peers. Now, as I talked about, when it comes to the U.S., the dollar moves, that's also tracked some of those top global headlines that we've been following. National Economic Council Director Kevin Hassett has blasted a New York Fed study on tariffs, calling it an embarrassment and saying those behind it should be disciplined. The Fed report found that nearly 90% of the tariff burden in 2025 fell on U.S. companies and consumers. Hassett argues the research overlooks changes in import volumes and insists Americans will ultimately benefit from the tariffs. The Wall Street Journal is reporting that a major U.S. arms sale to Taiwan is in limbo following pressure from Beijing. The report says some in the Trump administration are concerned that approving the deal could derail the president's upcoming visit to China. Trump said earlier this week that he had discussed the issue with Xi and would make a decision soon. And French President Emmanuel Macron rejecting social media companies' free speech defense as Europe considers banning children from platforms such as Instagram and Facebook. The Trump administration has criticized the proposals, calling them a form of censorship. But speaking in India, Macron said the free speech argument doesn't stand up. We have more ahead on the Asia trade. This is Bloomberg. We have breaking data out of Australia from the jobs market. We're seeing, in terms of jobs growth, 17.8 thousand jobs being added to Australia for the month of January, and the jobless rate coming in a bit softer than the consensus estimate and actually in line with the prior reading at 4.1%. Now, to what extent does this speak to a bit of a softening in the jobs market following on what was really quite a surprise surge for the month of December, which of course to some is what added to the case for the RBA in terms of that recent hike. Worth noting as well that the monthly employment data can be pretty volatile. We are seeing yields moving a bit higher in Australia, and that seems to be supportive of the Aussie against the greenback as well. And this is on a day where we're seeing slight reversal of the dollar's rally from a day ago. Shery?
Yeah, Avril, and take a look also at how the energy sector is trading at the moment. Of course, very important for the Australian market. We have seen oil jumping on those concerns around Iran and the potential that those ongoing conversations with Washington may not necessarily be able to avoid a conflict. There's been reports that American military intervention could come sooner than expected. So you can see the poly market pricing on the terminal in the right, pricing in a strike on Iran by the summer as a certainty. And this after that, Axios reports that that there are preparations for extended strikes. So we'll continue to watch this market, as we're also watching some of those miners across Australia, because remember, metals has jumped in the past month. We're talking about precious metals rising to record highs, gold surging to an all-time high, silver breaking a record as well. Gold also at the moment rising above 4,900. We have seen some volatility in this market, but dip buyers emerging. We do have the results from Rio Tinto as well to watch out for. Not to mention Australia's biggest pure play lithium producer, PLS, also reporting a first half profit of just under 33 million Aussie dollars, a 147% increase. Let's discuss these results and the broader outlook for the sector. Joining us exclusively is PLS CEO and Managing Director Dale Henderson. Dale, really good to have you with us. What would you say are the key takeaways from your results for investors watching this today?
Yeah, look, delighted with the half-year results we've delivered today. It's been a strong set of financials with 250 million plus EBITDA, a 41% margin. What's behind that? Well, strong performance, improvement in sales, improvement in production, lower costs. All of that's come together at what's an improving market for pricing, something in the order of a 40% increase on the prior half. But what's best of all for us, this is really our strategy in action. It's delivering. And so this half to us is really proving up a multi-year strategy which we've had in play, because navigating the lithium market, it's not easy. It's a small industry growing very rapidly. It's very volatile. Our strategy has been all about careful deployment of capital, building out production capacity whilst doing it in a more efficient way, whilst navigating the low points of the cycle. And here we are, what we think is on the other side of that. So delighted to be in a position to reward shareholders.
So how long do you think you can reward them with dividends as well?
Well, what we've flagged today is a positive expectation on the full year results. Of course, that depends how we go for lithium pricing, and ultimately it's in the board's hand. But in accordance with our capital management framework, free cash flow is going well and market pricing is going well. Well, that sets up the possibility for a dividend the full year. So, look, let's hope that happens. And look, the trajectory so far is looking pretty positive.
But the thinking behind no interim dividend for now, does that speak to perhaps the need for balance sheet flexibility and your expectations of market volatility for now still?
So the half that we just reported is really, in our view, sort of the inflection point of the market. After sort of 2 to 2.5 years of a downward trend, what we saw was really a low point in the September quarter, and the December quarter, we've seen the first of the inflection. So when you flow that through against our capital management framework, that doesn't print a dividend. It's minuscule. So in the board's view was, let's not look at a dividend for the half. However, as I say, on the expectation of continued strong pricing, well, look, we're set up well to consider a dividend of the full year.
Talk to us a bit more about how you have been seeing the lithium market perhaps maturing since the last boom in prices. What are some of the shifts that you've been seeing underway?
Sure. Look, there's a lot going on in the lithium industry. Of course, that's because what's behind that, we've seen broad electrification, increases in e-mobility, deployment of batteries for data centers, mass energy storage, you name it, some really strong growth support. However, the build out of the supply chain has been highly volatile given because it's from a small base. Now, in terms of the moving parts, well, there's many at all layers. So we've seen at geopolitical levels talk of shoring up different supply chains, dedicated supply chains. At the battery maker level, there's been a competition between battery makers and battery chemistries. And then further into the supply chain, we're seeing chemical converters and suppliers like ourselves vying for position. So there's been a lot going on, and we've seen in the media some downstream facilities which have been challenged, and we've seen others which are going well. It's a very fluid space, you might say. And well, for PLS, we've always known that. And what we've done is we've set ourselves up for that volatility, strong balance sheet, low cost position, options at our disposal. And here we are. And today's results really represent the strength that we've built over the years.
Yeah, it's a very dynamic market, and especially for PLS with your offtake agreement with CanMax Technologies, right? Are we going to see more of these sort of direct investments coming from big players, whether it's CanMax or General Motors or some other big giants going directly into the industry?
Look, my guess is yes. I think we will see bigger moves because the necessity is building. We envisage a structural deficit emerging, care of the strong growth and the absence of supply and the long gestation of supply. So that sets up a tension. Now, for those groups who are needing to secure supply, well, they're going to have to get involved and find tools and methods by which to secure that supply. So the likes of the offtake we announced is a proof point. It's the first of its kind in our knowledge, this combination of terms of $100 million US unsecured interest-free prepay coupled with a healthy floor price. To us, it speaks to the necessity to secure supply, but it also, I think, speaks to the value of partnering with PLS. We build a reputation as a reliable partner, and we think that's part of the deal we awarded last week.
Every time there's a dynamism in the market, it also means that other players will be jumping in, mines being restarted. Are you considering any restarts of your plants? And could this also risk oversupply at some point?
So we actually announced today reactivating some of our swing capacity. We've got our Nakajima processing plant. We announced today we're going to bring that back online for the simple reason it's low capital, allows us to lever that production volume into the market to capture some of this margin at the pricing that we're seeing today, which is sort of circa $2,100 per tonne. So it makes an abundance of sense to do that. Will others do the same? I think so, but for many of them, their situation is different. Their cost to bring their capacity back online is higher, and their gestation period is longer. So through that presents an opportunity for us. But of course, beyond that, well, we still see this potential emerging structural deficit because beyond the swing supply, well, where is the next wave of supply coming from? It's not being invested in yet. Meanwhile, demand is compounding this healthy 20% per annum growth rate. So look, potentially there's two waves of opportunity for our shareholders. The one we're capitalizing on now, plus this more midterm dated one where that broader structural deficit bites in.
You talk about some of these opportunities. Does that include in brines potentially at some stage? For you now, it's mostly a mining of hard rock, but some of your larger peers, they've bet heavily on brines. Is that something that PLS is considering actively?
Yeah, so as you say, look, hard rock, lithium supply, that's our specialty. It's what we build our business around. We have an open mind to diversification in brines. However, it's not our core skill set. If we were ever to do it, we'd probably do it in a small way with another partner. But it's not a strong pursuit of ours, but we'll certainly consider it. So yes, but what I'd add is sort of stepping back. The world needs a lot of lithium. We believe that lithium will come from the best assets globally. Those best assets include both hard rock and brine. So for these reasons, as a scale global player like PLS, well, of course, considering involvement in the right high quality assets is a good thing to do.
You talked earlier as well about some of the downstream projects and perhaps maybe among the players, some of your collaborations are faring a bit better than others in the market. What do you think is helping the cost curve in terms of performance, specifically for PLS?
Sure. Look, it's as a function of the sort of the volatile lithium market, particularly the period we had sort of over the last 18 months, was a challenging time for any downstream operator globally, including those established low-cost operations within China. So very challenging market as a function of the low pricing everyone had to experience. And we've spoken historically about being deep into the cost curve. Now, in terms of where to from here, well, our view is the world needs to build out multiple supply chains to serve this growth market. So more downstream is required, absolutely. Now, that's why we've got involved with our joint venture with POSCO in South Korea. And we think that's got the makings of a fantastic position for the long term. Reason being, it's an existing battery hub ecosystem with, buyers of the batteries being car makers. It's got cathode making, battery making, and now chemical production care of our facility. And it's a relatively low-cost jurisdiction. So for these reasons, we were drawn to that. We're a minority participant at 18% with the option to step up. We think that stands a really strong promise for a positive future. But outside of that, yes, others have been building other jurisdictions, and some of that has been challenged because they are higher cost jurisdictions or they're without the synergies of an existing ecosystem. But a lot more needs to be built out over time.
And we'll watch to see what that means for your business. Dale, thank you for sharing a slice of it with us today. Dale Henderson is Managing Director and CEO of PLS. We have more ahead on the Asia trade. This is Bloomberg. Take a look at how currencies are faring. Of course, in the spotlight is the Japanese yen, sitting flat now against the greenback, but it did lose ground just a day ago after the dollar rallied, and the yen falling was also part of that broader sell-off in major currencies as U.S. economic data supported higher Treasury yields. Minutes from the Fed's last meeting also confirmed that it requested a rate check last month on dollar-yen. Our chief correspondent for FX and Rates at Asia, Ruth Carson, is with us now. So, Ruth, what are investors focusing on to perhaps drive the pair for the rest of the week?
Yeah, it's the yen used to be very much about risk on and risk off, rate differentials, and then that sort of ebbed as, Japan fell behind the curve a little when it came to fighting inflation. Now, rate differentials are back in many aspects as macro traders really focus on the Fed's path when it comes to, its future rate cutting cycle, in fact, stopping. So that is very much in traders' focus as they look at trading dollar yen. We saw from the FOMC minutes overnight as well about, the confirmation of a rate check on dollar yen on the New York Fed side. And again, that sends a very strong signal about the direction of the pair. Now, we have an auction coming up with JGBs that will no doubt influence trading on the yen as well. And also remember that liquidity is still somewhat thin, as particularly in Asia, as investors still are on holiday in some parts of the world. So definitely watch this space when it comes to yen trading. We could see some volatility ahead.
Also watching a 20-year JGB auction, the first since Prime Minister Takaichi's election victory. What should we expect?
Yes, so this is a 20-year auction. We do know that ultra-long bonds have been in the radar when it comes to volatility, particularly when we saw, the 30, 40-year JGBs yields actually spiked 25, 26, 27 basis points just last month. That's still fresh in investors' memories. But that said, the so-called Takaichi trade, sell bonds, sell yen, have actually taken a back seat, interestingly enough, since Takaichi's resounding win, as we saw. So this will be a litmus test. If we see a strong result, that could certainly go a fair way in calming investors' nerves about the performance of these long bonds.
Talking about selling bonds and climbing yields, we are seeing the Aussie dollar also firming today. Yields are picking up a little. given the jobs data that just come out of Australia, it looks like a fairly solid jobs market. What does this mean for trading in the Aussie as well as the path of the RBA?
Yeah, great question. So the RBA is the first DM central bank in the world to actually raise rates this year. It's often seen in a way as a canary in a coal mine because Australia is home to a very open economy. It's a small, open one that's very linked to trade and China and, of course, commodities and risk sentiment. The Aussie is the best performer this year against the greenback in the G10 space. And that sends a strong signal to investors. Growth up. Commodity prices, despite the wobbles we've seen, probably a positive. And so all this will be on the RBA's mind. You know, inflation taming is still a very much a mandate for all the credible central banks out there. And the RBA is no exception. They'll be watching everything very carefully, the jobs market, the property market, the retail sales numbers, and go, look, is this the right time for us to hold rates, perhaps even hike more? Traders will be weighing that in their trading day.
Yeah. Tricky environment for every central bank around the world. Ruth Carson, good to have you with us. Bloomberg chief correspondent for FX and rates in Asia. Let's turn to tech. Google DeepMind CEO Demis Hassabis says India has huge potential in artificial intelligence thanks to talent building up in the country. He spoke to us alongside Alphabet Senior Vice President James Manica at the AI Impact Summit in New Delhi.
I've worked on AI my whole career, my whole life, because I believe it could be the ultimate tool to accelerate scientific discovery and medicine, and also help with some of the other grand challenges facing society today, like climate change and energy. All of these things I think AI can help and be applied to. On the more individual scale, and maybe also for India specifically, I think that this incredible technology, powerful technology, is sort of available to almost everyone around the world, maybe only with a lag time of a couple of months behind the absolute frontier. So what I imagine if I was a young person today thinking about working in technology, maybe building a business, is I think there's incredible untapped potential here. And using these technologies, you can almost sort of become superpowered. You can kind of do 10x of what I think an individual engineer could have done in the past. And so I think there's incredible new business opportunities and new types of jobs that will be even more high earning and more valuable and more fulfilling than perhaps some of the jobs that will be disrupted by AI.
How do we position for that?
No, I would also just add a few more things. I think part of the potential for average benefit is enormous, but I think there's some work we all have to do. So, for example, if I think about questions of access, that's so important. How do we make sure everybody actually has access to the technology to be able to use it, capitalize it? Other questions of access, which are particularly important in countries like India, are access through different languages. For example, I mean, India has many, many different languages. And I think focusing, for example, on making sure that people can actually access the technology in their language, in their culture. And that's one of the reasons we're spending so much time on in the Indic languages. I mean, we have a project right now with Project Vani, where we're trying to work across something like over 700 districts and all the dialects that are used in those districts to see, can we build in more Indic languages? So if you think about that question of access and linguistic access, that's one of the ways you democratize the possibility of people being able to take advantage of this technology.
Google DeepMind CEO Demis Hassabis and Google and Alphabet Senior Vice President James Manica speaking with Bloomberg Insights anchor Haslinda Amin. More coming up from the India AI Impact Summit. We'll speak exclusively with the COOs of Zoom and enterprise software provider ServiceNow. Plus, Schneider Electric CEO Olivier Blum will join us. Those conversations coming up at the times on your screens. This is Bloomberg.
Mistral AI CEO Arthur Mensch says betting on the open source models in the new technology could be a winning strategy for India. He spoke to us on the sidelines of the AI Impact Summit in New Delhi.
I think the right framing is really in between centralized technology with closed source models and decentralized technology with open source models. And there, I would say Europe and China are playing a role, and we are I'd say, competing or collaborating, you can say, with other labs that are releasing open source models and building on top of each other. So I'd say the way India should probably look at this problem is that it's a safer bet to bet on open source technology because they will have ability to customize the models that are open source to the cultural nuances of India, ability to deploy them on local infrastructure, then potentially on the edge as well when it comes to deploying it on mobile phones. And so betting on open source is something that Europe is doing actively and heavily. It's something that India can actually do to its benefit.
And you think the Indian model can be a template for the global south?
Well, I would say yes. We do work with countries that are taking similar bets, like Morocco is betting on open source to serve their citizens, the Moroccan state, Moroccan companies as well. And so betting on open source technology to customize it and to deploy it on local infrastructure is something that is extremely relevant in Europe, extremely relevant in Singapore, extremely relevant in India, in Africa. And is it a template for the global south? I don't know. It should be a template for the world, really.
Mistral AI CEO Arthur Mensch speaking with Bloomberg Insight anchor Linda Amin in New Delhi. Now let's take a look at how Asia is faring with Greater China market still going to be shut. Today, we are seeing the Australian benchmark after a jobless rate that came in lower than expected. There is a bit of pairing of those stock market gains, even though energy-related stocks are still leading the charge. Investors are, of course, digesting earnings from some of these miners and consumer-related names as well. For the moment, the Kospi is leading gains in the region, a lot to do with these price hikes reportedly underway or set to come from the memory players. That's it from the Asia Trade. The China Show is next. This is Bloomberg.